Can the IRS garnish a joint bank account? Only if one of the account holders on the joint account has tax debt. Common example, married couple. One spouse has tax problems from before they were married, or maybe they filed separately, and one spouse has ongoing tax problems, but the other spouse is clean. They share a joint bank account. Can the IRS levy that joint bank account for the offending spouse's tax debt? I'm going to get into all of it, but first of all, who am I? Why should you listen to me? My name is Logan Alec. You can pop my name over into Google News. See all the places that I've been quoted in the media as an expert on taxes and tax relief. Here's an article as in U.S. News. They reached out to me a lot about the basics of the offer and compromise program. I own Choice Tax Relief. We help folks who have tax problems, people who have tax debt, income tax debt, business owners, W-2 employees, payroll tax, you name it. Also folks who have unfiled tax returns need to get caught up with that. Reach out to us, call us 866-8000-TAX. You can also fill out the form here on our site so we have your information and we will give you a call. But now let's get into the meat of this video, which is, can the IRS levy a joint bank account? And if so, what can I do about it? Well, unfortunately, the IRS can, in fact, levy a joint bank account. I'm here in Internal Revenue Manual section 5.11.2.2.1, paren 1, little b, and I'll read it here, beginning with the word any. Any property in which the taxpayer has an interest is subject to levy, even if the property is jointly owned with another person, such as community property and jointly owned bank accounts. However, because wrongful levy suits and claims can result from such levies, consider levying on another available source. So the Internal Revenue Manual is the IRS's instruction manual for its own employees. So that's why it says, hey, consider levying. Let's say, hey, IRS employee, consider levying on another source. So what does this mean? This means that the IRS can levy joint bank accounts even if only one of the account holders has tax debt. Okay, it has a legal right to do so. However, joint bank accounts, according to the section of the IRM, are typically not the IRS's first choice when it comes to extracting money from tax debtors. That said, we see it all the time. Spouse A has tax debt, is on a joint bank account with spouse B who does not, and the account or the bank gets served with a levy notice. And so what do we do about it, right? What can we do about it? It's scary. It sucks. They can really drain your bank account, right? And it is quite scary. So first, let's talk about how IRS levies work in general, and then, well, and in particular with respect to joint bank accounts, and then we'll talk about what you can do about them, okay, to fight them. So the levy process actually begins a lot longer before the bank actually gets the levy notice. Okay, it starts with the IRS assessing a tax. Okay, so the IRS must have properly assessed a tax against the individual that it's seeking to collect money from. Okay, that assessment is usually done after the individual files a tax return or the IRS files a return for them, called a substitute for return, or SFR. Then after that assessment is done, in order for the IRS to levy them, the IRS has to send 3 notices to that taxpayer. Okay, the first notice is called the notice and demand. Basically, this is what you owe us, or we think you owe us, and we're demanding that you pay it or else. If your account's an ACS, or sorry, the computer generated account, the computer generated notice that usually corresponds to this legal requirement is called the CP14. I've created a video about the CP14. You can check that out. Link at the top of the screen or in the description below. Okay, that's called the notice and demand. Next notice the IRS has to send is the notice of intent to levy, to warn the taxpayer that levy action is coming if they don't resolve their tax debt. This notice has to be sent at least 30 days before the IRS intends to take levy action. The most typical notice number for this notice is the CP504. Okay. And finally, the IRS has to let you know what your rights are to have what's called a collection due process or CDP hearing. And unless you're with a revenue officer, they use like another form. But the most common form to inform you of your rights to a CDP hearing is usually the LT11. Okay, it says like file notice of intent to levy and notice of your rights to a hearing. Okay, so the IRS has to have sent those to the taxpayer who owes before they can take levy action on a joint bank account or otherwise. If the IRS has not done so before levying, the levy is improper and you can contest it on those grounds without paying them a dime. Okay? But assuming all these things were done correctly, what happens is the IRS sends a levy notice to the bank. And this levy notice is, it looks like this. Let me pull it up here. So it's called a 668A. So this is what goes from the IRS to the bank. It would have, your name and address right here, your social security number, right here next to identifying numbers. So basic personal information. And then it would list out the balances down here of the amount that the individual who owes the IRS, how much they owe, right? And then at the bottom of this form, it gives instructions on the bank for what to do. And where is it? It says, starting here, this levy requires you to turn over to us this person's property and rights to property, such as money, credits, and bank deposits that you have or which you are already obligated to pay this person. Okay. However, don't send us more than the total amount due, which is the total amount the individual owes the IRS, for which proper pre-levy action has been taken by the IRS. So what this is doing is informing the bank that they have to give the IRS, right, whatever is in the bank account, up to the total amount due, indicated on the notice, the amount that was in the account as of the date the levy was served, right? So let's say the levy was served today and you make a big deposit tomorrow. That amount tomorrow can't be touched in general. Now, there's this 21-day freeze period, which is very important. It's mentioned in the 668A itself. It says, money in banks, credit unions, savings and loans, and similar institutions must be held for 21 calendar days from the day you receive this levy before you send the money. Okay? And this freeze period is very important because it is during this freeze period that you have a shot at getting the levy on your joint bank account released. Right. And this kind of brings me to my next point, which is, what to do if your bank gets hit with this levy, right? And you're still in that 21-day freeze period. How can you fight this levy so the IRS doesn't get the money? Well, first, figure out how much was actually levied, right? Like I said, if when the levy hits the bank account, you only had $10 in the account, you don't really have to freak out, right? Because those $10 will be frozen. Then after 3 weeks, after the end of 21 days, the bank will send the $10 to the IRS, right? So, I'm not saying the tax issue shouldn't be addressed, right? It should. Whoever has the tax issue should address it. All I'm saying is that if there's only $10 in the account, that's all the IRS is going to get. If there's only $10 in the account when the levy hit, that's all the IRS is going to get. Doesn't matter if you deposit $10,000 the next day, right? Unless there's a continuous levy going on from an RO, which is, I imagine if you're watching this, you're not in that situation right now. Next thing I would say is get your bank's fax number. And if it's a big bank, the fax number of the actual department that handles these things. And ideally the name and fax number of a specific person at the bank who can be your point of contact there. The fax number is important because once you get the levy released by the IRS, which I'll tell you how to do here in a second, assuming that you do get it released, of course, I want you to be able to give the IRS the fax number of the name and the fax number of the individual at the bank. There's a specific person who can unfreeze your funds. Okay, so you've determined what's at stake here, right? How much could actually potentially be levied. You've gotten the contact information, fax number, the person at the bank. Now, step 3 is figure out what the heck you're going to do about this levy. How are you going to fight it, right? There are 6 major ways to do so. First one, pay your balance. Okay, no one wants to hear that, right? But obviously, if you pay the IRS what you owe, they're going to release the levy, right? Second one is to just request a little more time to pay off your balance, right? If you think you can get the money here, in a short period of time, have the person who owes the IRS, right? Let's just say it's your spouse, right, who has the tax problem. Urge your spouse to call them up or hire someone to represent them to say, hey, IRS, I'm gonna get the money soon. Give us a little more time. This is not necessarily a formal arrangement, right? Like an installment agreement or something like that. But sometimes this works. Okay, IRS doesn't always grant informal requests like this. But if you can, you or the individual at the tax set has some kind of game plan that makes sense to the IRS and how you're going to get the money to pay it off here in the near future, they may release the levy. Next option, set up a formal installment agreement with the IRS, right? And of course, I'm talking with respect to the person who has the tax problem, and make sure the terms of the agreement don't permit a levy. This could be a full payment installment agreement. These are generally the easier to get, right? Because you're promising to pay the full balance to the IRS. It could be a partial payment installment agreement in which you're convincing the IRS that they should take less money from you over time than what you owe, right? So there's, some of that is written off. I get into, these options in a lot of my other videos and IRS installment agreements or, the tax forgiveness programs and all that. So I'm not going to get into detail about them here. You could also prove to the IRS that the levy is causing you an economic hardship, right? So you're going to have to show them financials showing that, hey, IRS, I need this money to pay my basic necessary living expenses, and it's wrong for you to take levy action against me. This is commonly done by getting into what's called currently non-collectible or CNC status. I have a video about that right here in the channel. Link to that video at the top of the screen or in the description below. But you can also take kind of a more informal approach with the IRS or with the IRS employee who issued the levy. If you're really about to lose your shirt, right, due to the levy, and the IRS employee who issued the levy is being unreasonable, contact that individual's manager at the IRS. If the manager is being unreasonable, contact TAS, Taxpayer Advocate Services, see if they can be of assistance. You can also submit an offer in compromise, right? Or have the individual on the joint account who's being levied submit an offer in compromise. This is an agreement with the IRS to settle your tax debt for less than you owe. 21 days is a very short period of time to put together an offer in compromise. So maybe sometimes the play here is get them into some kind of workable installment agreement to make the levy go away or I'm talking about, for our client. Sometimes the play is to get them into an installment agreement to get the levy to go away, the IRS to release the levy while we work on the offer and compromise to settle the debt once and for all. And finally, like I kind of alluded to earlier, you can see if you can prove the levy was administered not according to proper procedures, right? This is usually tough since more often than not, the IRS does follow proper procedures before levying a bank account, but sometimes they don't, so you have a shot here, right? Showing that these notices weren't delivered, that the assessment was incorrect or something, right? But, like I said, realistically with most of our clients, what we do in this 21-day period is either plead hardship for them if they're, really, really broke, or, if they have some disposable income, get them into some kind of installment agreement, right, with the IRS while we work on a more permanent resolution for their tax issue. Then, right, so stop the bleeding, first of all, installment agreement, maybe hardship. And then if they qualify for something better, get them into that. It's just hard to do that within 21 days. And sometimes it's looking at the liability, right? Is this liability even proper, right? Or was it assessed based off an SFR or something the IRS did that's completely overstating the liability? Could be offer compromise, could be a number of things. I've created a video on all of these IRS debt relief programs. You'll see that video on the left-hand side of your screen, along with other tax relief videos. Like I said, my name is Logan Alec. I own Choice Tax Relief. I am a CPA. Give us a call, 866-8000-TAX, or visit us at choicetaxrelief.com, and we can see what we can do about your tax problem. See you in the next video, folks. Bye-bye.